Hey, so today, guys, we're diving into a topic that most people completely overlook until it's too late: taxes and tax strategies. Now, understanding the basics of tax planning can make a huge difference in how fast you can get ahead. So, when should you start thinking about investing while you're still in debt? Are there tax strategies that you can leverage right now to speed up your journey in getting out of debt? And what about mindset shifts? Do you need to make any of those to get out of debt, but also stay out of debt for good? Now, to help us unpack all of this, we've got a Chase Insogna, an expert in tax planning and financial management who's helped countless individuals and business owners transform their financial futures. Hey guys, welcome to today's show. I am Brad Nelson, the founder of Debt Free Dad. I paid off about $45,000 of debt, have been debt free now for over 12 years. And I've also been fortunate to help thousands of other people save and pay off tens of millions of dollars with the work that we do here at Debt Free Dad. Now, after listening to this episode, you guys, if you're ready to take things to the next level, you're ready to break free from living paycheck to paycheck, you want to reduce financial stress, you want to build your savings and finally pay off debt for good, but maybe you're just not sure where to get started. We've created some incredible free resources here at Debt Free Dad to help you get there. And I'll be sharing some details about how you get started with those later on in today's episode. So, hey, Chase, welcome to the Debt Free Dad podcast. So glad that you're hanging out with us here today.
Thanks for having me.
Yeah. So, how did you get into all of this tax planning stuff? Because for a lot of people, tax is a very confusing thing. A lot of us aren't taught about it. We don't really understand it. So, how did you get in to be an expert in this and get started in this field to help people?
Yeah, great question. I would say I was just like natural at studying tax. It's one of those things that I can read it and I immediately remember it. In college, if you didn't study accounting, you wouldn't know this, but there's only one tax class that they have to take in college when I was taking it. I'm getting my degree and I immediately picked it up very succinctly and very easily. So I was like, maybe I should follow this. Plus, personally, I was like, if I remember all these rules, I'll be able to personally benefit from the tax code. And that's kind of where it generated from. And then since then, I've been helping do taxes for business owners and individuals. And it's just kind of been a career 25 years later of developing that tax knowledge.
Yeah. So, when it comes to when we talk about things like taxes and the words like tax strategies, what are some of the, I guess, basics that every person, no matter if you're a W-2 employee or run your own business, like what are some of the basics that we should all understand about taxes?
One, you have to pay them. That's a
Right.
basic understanding, unfortunately. And then two, for individuals, it's making sure your W-2 is adjusted. I think a lot of perception is, oh, I want to have a big refund, but you're just paying the IRS, and not getting a return on that money if you're not contributing it to your check every month. So adjusting, if you're single or married or those things have changed, you want to take a look at what your holding should be and adjust it appropriately. And come tax time that you're filing right now, we're in tax season as we record this. If you get a big refund, you might want to adjust your current year holdings. So this year you get more money every month, but you're not going to get that big check.
Yeah.
So, that's my recommendation to individuals. When it comes to business, it's very all over the place.
Yeah. It probably
You
depends
know,
on the business. Yeah.
you've got consultants that are maybe have W-2 and 1099 income. There's
Right.
that aspect. You've got just business owners. Do you make the estimated quarterly payments? Do you not? I would say half my clients it's 50-50 over here. Half like to pay it quarterly because they don't want the penalty. The other half, including myself, I don't pay it because I want my cash liquid as a business owner in case I need to go get some of it and use it. I don't want to have to get a line of credit and go
Right.
chase down a bank or a hard money lender to get cash. So I keep it in a high yield savings account and I pay that estimated tax penalty on my 1040, which is very minimal, by the way. So I like to approach it with my clients as it's your own line of credit interest, basically, that you're paying on that money to keep your cash liquid throughout the year as a business owner that
Right.
doesn't get a paycheck for extra money. So
Right.
it just depends on the situation for everybody.
Yeah, I love that you brought up, by the way, the tax refund because I was just talking to someone close to me. I was out to lunch with them, and they said they were getting a tax refund, and they said they called it a bonus. I'm like, no, it's not. It's not a bonus. It is you sent the IRS too much money, and they're just sending it back to you. That's it. And
Yeah, well, it's
you
a
could have
bonus for the government.
right,
Mm.
right, bonus for the government because they get to use that money throughout the year and make money off of it. Yeah,
Especially in a high rate interest rate environment, like we're recording this in 2025 here, so you can earn 4 or 5% on your money just in
right.
a savings brokerage account. Just think if you're getting a $10,000 refund, that's $400 or $500 a year that you're missing out on that you could be uh,
Yep.
using cash for yourself. Something to think about as you adjust your withholdings there.
Yeah. Yeah, you're right, you're absolutely right. Because if you're someone who is just living paycheck to paycheck or every month is a little bit of a stretch and you're getting these big refunds, you could easily put some new cash flow by dispersing this refund throughout the year and actually getting that money more upfront rather than giving it to the IRS. Yeah, so if you're getting a big refund, something for you guys to think about. What are some common misconceptions about tax or maybe some of the big mistakes that you see people making? Now, I've worked with small business owners. Now, I don't get into taxes with them, but just talking to them about their finances, I know for some small business owners, I know one of the biggest mistakes is they don't file at all. It's like, yikes, you can't be doing that. But what are some of the common mistakes that you see people making?
Definitely we have some that don't file. That's not a good idea, especially if you are owed a refund after 3 years. The IRS doesn't give it back to you technically, so you're missing out there if you have a refund. But I think the biggest thing is if you have FW2 and a mortgage, you can use TurboTax. It's not a big deal. I mean, it's pretty straightforward.
Yeah,
You're not really going to miss out on anything. We tell clients when you have a small business, you have 1099 income, you have rental property, you have stock options. We're based in Austin, so there's a lot of tech here with a lot of stock issued and exercised. Those is where tax software one does not play in the gray area, and two is tricky on capturing basis on options. So if you're getting into those things, I mean, I would definitely recommend getting a CPA and adding value.
right.
Yeah, you're paying to get your return done. I got a side note. I got a friend here that long friend. He texts me. He's like, hey, I owe a lot of money to the IRS because he had a bunch of stock options with one of the FANG companies. And I was like, yeah, my team does taxes. I don't personally do taxes, actually recording them. My team does it here at the firm. And so I'm like, hey, you want to pay my team to do it? They're happy to. It's a very reasonable price. And he's like, oh, I just do it with a free software. He sent me the link. I'm like, well, you get what you pay for over
Get
there.
what you
So
pay for.
if you don't want to confirm that you owe that to the IRS, and it's a lot of money. I'm not going to give out the amount, but it's a lot in most people's eyes. And I'm like, you don't want to pay this minimal amount to just confirm this is the big check you're going to write to the IRS, that's on you, buddy. So I don't know what
Yeah.
to tell you.
Yeah, right. I would totally agree. Yeah, if you're a business owner and hiring a CPA and having them on your financial team, I think is I would never do it. Like I have a CPA, I send it all to them. When they just keep me updated, it's so nice and it is worth the investment. Just from a time saving standpoint of making sure that they caught everything because I don't keep up on it all the time. It's not what we focus on here. So having that expert in your corner is really important.
Yeah,
Can
and
we,
I would say with especially if you have 1099 income or rental property, some of the examples I like to give just off the cuffs. Tax software does not play in the gray area. So if you own a rental property, for example, they're not going to ask you for your cell phone or your home internet that you
right.
manage the property to. That's like what, a couple $1,000 maybe,
Yep.
800 for internet,
You got
1,400
it.
for a phone
Right.
that you could take as a deduction on your rental property. Same thing for 1099 income. They ask for your home office, but they don't ask you to split out home internet. So you're
Right.
going to get pennies on the dollar for recording your internet on a tax software versus the $800 deduction on your Schedule C for the small business. So again, that's why I always recommend if you have those things, the CPA can add value. We're always looking to add value on the returns we prepare. That's why we recommend TurboTax or whatever for W-2 and a mortgage
Yeah.
tax software because there's really no value add there. We want returns where we know we're going to add value and our fees justify preparing it for you.
Right. Can we flip it a little bit and talk a little bit about debt? You mentioned in your bio you help people with debt payoff strategies and helping people turn around their finances. Where do taxes fit in with debt payoff or anything, or are they separate? Or what are your thoughts on that?
I would say certainly don't get into tax debt because it never goes away. A big thing with business owners or people that own e-commerce that have a lot of cash flow type businesses, the big thing they run into is they don't plan for the tax is due in April and then they just get in the debt they just build up debt and they're behind always paying it off with current money. That's a situation you don't want to be in. So we try to advise our clients when we're working with them monthly with businesses that, hey, this is what your estimated taxes this month, this quarter. Like you need to put this in a savings account. It's not going to go away come April, even though it might not be in the bank account. Your taxable profit still exists that you're going to owe it on because you're reinvesting the money back in the business. So that's a big one. Just personally, I had debt when I was younger. I had a student loan. It took me 10 years to pay it off. I had credit card debt that I was constantly moving from zero interest card to zero interest card and paying the 3%. And it took me a good 10 or 15 years out of college to finally get over that hump and not have that debt burden anymore. And I would say to your viewers, if you're still in that debt window and you get past it, once you go over the mountaintop and start down the other side where you're investing your money that you're not having to pay debt on, it's a totally different situation. I mean, I've been able to accumulate a lot of my own personal wealth after I got over that debt mountain,
Yeah.
and it really does build on itself quickly when you put it in dividend paying stocks, and it does make a huge difference. Now, outside of a mortgage, I'll personally never pay that off. I hit the bottom in 2020 at 2375 for
Right.
30 years.
Right.
So that's like free money to me. But
Yep.
I'll say for most people, just if you can get out of the student loan debt, make sure your taxes are paid off, get out of credit card debt, make sure those are paid off every month. It really does make a difference personally.
Yeah. And that's I was going to ask you that. I also want to talk to you a little bit about investing and debt payoff and where you feel in your profession where that fits in. But for someone who is, say, struggling with credit cards and student loans and they're dealing with a lot of financial stress, and as a tax professional, an expert, like where would you recommend, like in you, because you've been through this, you've gotten out of debt yourself. What do you feel made the biggest difference for you?
Well, I would say to back up there, I heard from JP Morgan one time, people only have a 2 year horizon. And I told you it took me 10 years to pay off a student loan, 15 to get a credit card debt. It's not going to be overnight.
Right.
If you budget your money and you're diligent at paying down the debt over time, it will eventually turn a corner for you. But it's going to take time, and you're going to have to invest and change your lifestyle maybe to become debt free. But I would say on the back end of that, once you are debt free, being able to max out retirement accounts, being able to build up short term savings accounts, having a lot of liquid cash, putting all the other cash in my brokerage accounts and letting it earn money on the money that it's earning, it definitely is a huge difference, knowing what it can do for you after the fact.
So going back to my investing question, is a lot of people ask, Brad, when should I start thinking about investing? I'm paying off my credit cards. I'm paying off my student loans. I've got a vehicle payment I'm paying on, and there's not a whole heck of a lot of money left at the end of the month to start investing. But should I start thinking about it? Is there anything that you could say to individuals who are in that situation, even from a tax standpoint, that they may want to think about?
Oh yeah, apologize, I didn't understand your question. Yeah, I would recommend if you're at work and you get a match, I would at least take the match if your budget affords it.
Yeah.
Beyond that, I don't recommend putting any more into retirement accounts beyond the company match until your credit cards are paid off. And then from there, depends on your student loans. If it's not a payment that adjusts based off your tax return annually, I would say let it run out for the term, depending on the interest rate. If you're 5 or 6% or under, you're fine. But in these days, if you're 8 to 10, you might want to fast track that a little bit.
Yeah.
And then from there, at least the next step is to just do an individual IRA, which is 7K individuals right now, you and the spouse. And do one if your income is too high. You can always do a traditional IRA and you can backdoor that into a Roth to grow tax free. That's a start. And then from there, the next level is to go back to your 401k. Beyond the match, I would be maxing out a Roth IRA. If you're under age 55, I'd be putting as much possible in a Roth. I know it goes back and forth between the conversation there of traditional pre-tax and post-tax.
Right.
But I would say, I just talked to somebody the other day. I told them what you want to do is follow the old people and their advice.
Yeah.
Because if you listen to most of them, in their 60s and 70s when they're drawing Social Security, they're all like, we wish we would have put more money in Roth. So go listen to those people. And then that's what I tell my clients, like Roth is the best option, because when you get into
Right.
retirement, you don't want that taxable income. You
Right.
don't want the RMDs to have to deal with against your Social Security. So go back to your 401k, max that out for the employee portion up to Roth. And then from there, then if you have a small business, then we get into other retirement plans that we can work on. But if you're an individual W-2 employee, from there it's brokerage account. Go find a financial advisor, manage your own portfolio like I do, and just find what philosophy fits you best. I do dividend stocks and value investor. So go start building your brokerage account, letting it earn money for you as you look to retire one day, or saving for something important for you.
Yeah, that's great. So if I'm interested in hiring a CPA, what are some things that I should watch out for? Do like there's these corner name brand tax outfits that are out there. They put on all the Super Bowl commercials and everything. It's tax refund season. And what are things that people should know? Because most people are going into this with very little education. What are some signs to look out for, like you're working with the wrong person, or what are some things maybe to qualify them that they're experienced enough to help you with your particular tax situation?
Hey, great question. I would say if they're just entering numbers and giving you the paperback and go file it, what their value is. For us, we're pushing clients for deductions. We're constantly asking them, like, hey, do you have this? Do you have this? Like, we have a whole list of questions that we ask. I'd also say if there's a lot of individual tax shops out there, I like to tell your audience that there's no requirement to be a tax professional and file taxes with the IRS. You don't need a certificate. You don't need a degree. You can literally, hosting the show, can go tomorrow and open up your own tax shop, pay $40 to e-file returns, and now you're a tax expert. That's all it takes.
Yikes. Oh my
And
God.
if you're not at least an enrolled agent or a CPA,
Right.
those are the two things I think your viewers should look for. Because at the end of the day, if something's done wrong on your return and they're not one of those two designations, there's no recourse for you to go back to and chase down the mistakes that were made and have them affect their career with the mistakes they made.
Yeah.
So again, I see it all the time on TikTok and Instagram and Facebook, all these people in these tax shops out there, these individuals just doing taxes. That's not the person you want to work with, in my
Yeah.
opinion. You want somebody that's at least have put forth an effort in continuing education with an enrolled agent license.
Right.
And then from there, certainly a CPA that's licensed and state board protected.
That is fascinating to me that you do not need a license to file taxes
Yeah.
for people professionally. Like I get, like if you're helping out your brother, your sister, your mom, or your dad, but man, to do it professionally, you don't need a license. I never knew that. That's crazy. Wow.
And America's like one of the only countries that allows this. I mean, I
Yeah.
have foreign rental property, and you can't just open up a tax shop and file taxes in most countries
Right.
without any education.
Yeah. Wow. Fascinating. Well, Chase, this has been some great information for our listeners. If people want to learn more about you, where can they get that information from?
Yeah, happy to help. You can visit our website, insogniacpa.com. It's INSOGNACPA.com. Just hit us up on the contact page. We have a team of 20 people here, so it's not me doing all the work, which is why we're talking about this in tax season. And my team is happy to reach out immediately and have a conversation with you, see if we're the right fit.
Cool. Sounds good, man. Well, thanks so much for being on the show and just sharing your expert advice and just some amazing insight. And hopefully a lot of us learned some things here today too.
Yeah, thanks for having me.
Yeah, absolutely.
All right, guys, if you're ready to break free from living paycheck to paycheck, you want to reduce financial stress, you want to build savings, finally pay off your debt for good. But again, you're not sure where to get started. Don't worry. We've got you covered here. Simplify My Money is sent each Sunday to your email. It's your step-by-step roadmap to better financial control. And you also learn easy to follow strategies to manage your money effectively. It's going to be stress-free money decisions of all the tools that we're going to give you. These are going to help you simplify your financial life with proven tips that actually work. You're also going to gain the tools and confidence to tackle your financial goals head on. You can sign up for Simplify My Money by clicking the link at the top of the show notes. Hey, we get that getting out of debt isn't easy, but with our help and with your consistency and discipline, we promise you guys, this will be some of the best work that you guys do in your entire life. Thanks for joining us on today's show, and we will see you guys on the next episode.